Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Friday. In today's program, I just really want to have a quick chat about the recent non-farm payroll announcement and what that currently means to the market. Plus, do my usual Friday wrap-up of the week and talk about a potentially key, almost major event happening next week. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So basically, I called this little video "No Pain, No Gain." What do I mean about that? Now, for those of you who were kind enough to join me in my watch along of the non-farm payroll announcement, just over an hour ago, I did say that for the Fed to really start taking action in a way that the market's hoping, i.e., do a pivot or be less aggressive, the Fed really needs to see real pain. If they're not seeing real pain in the economy, then they're not going to be any gentler. They're going to carry on with their aggressive path. And indeed, the NFP came in better than expected at 263,000 versus 250,000 expected. So yes, slightly better than anticipated. But here's the thing, okay? Here's the thing. This is why I think, it's bad news for the market. It's still very good news for the Fed because it means they can carry on. But clearly there is a slowdown. There is a slowdown happening. So we go through the numbers. January, the NFP was 504. February 714. March 398. April 368. May 386. June 293. July 526. August 315, and now today 263. Okay, so it is slowing down, but that number is just not dramatic enough. Not dramatic enough for the Fed to really start thinking, okay, we're going to need to go gentle now. No, they don't have to. They can carry on going aggressive. US unemployment was also announced better than anticipated, 3.5%. versus 3.7% expected. In fact, it's now at the levels pre-COVID. The unemployment. So still pretty positive. So like I said, all this really means, and we can look at the market, how the market's reacted. All this really means is basically the Fed can carry on being aggressive, and just maybe now, the market can actually accept reality that the Fed is not going to be doing any pivot. The Fed is going to carry on. And this good labor data we had today, this good labor number, just going to give them more and more confidence to proceed and be aggressive. So most likely on the 2nd of November, we will get another 75 basic point rate hike by the Fed. Now, this is something else I need you to do. Write down this date, because this is the next big thing, because this leads in beautifully to a big event which could potentially overshadow all of this, okay? And that is, of course, the 13th of October. So remember that, write that down, because on the 13th of October, we're going to have the US CPI reading. US CPI. As we know already, their inflation is around 8.3%. It was higher than anticipated last month. They were expecting 8.1, so 8.3. So this could be a really big event. So make sure you got that date in your mind. And I will, no doubt, be doing a watch along for that event, because like I said, I can see this potentially really being a really dramatic market mover. So come and join me for that. And market as it stands on the back of the NFP, though, Wall Street is currently weighed down by this job data, and US dollar is king once again. So let's have a quick look at the market, see what we're looking at. So this, of course, initially is gold, okay? Gold under pressure because of this good NFP number, currently trading at $1,695.88. It's just under at the moment, that psychological level of $1,700. Okay, if it can remain under $1,700 and keep this pressure on, the next potential key area of interest for me will be $1,667.86. That was the level that, say, the gold started at the beginning of the week, and obviously it's had a good week up until the last 3 days. It had a good Monday and Tuesday, in other words. But like I say, gold is under pressure, obviously on the back of this. Euro is the same picture with the euro as well. Again, dollar strength. So we've seen weak euro once again, currently under. It was trying to so close to staying above the 0.99 handle at the beginning of the week. Now it's all turned around again, back under pressure, currently trading at 0.99747. Next key area for me on this, I'll be keeping an eye on, would be certainly round, actually just under this now. I would say around about 97.20 I'll be keeping an eye on as a potential area of interest. Sterling, again, what a 2 weeks it's been through the cable. Again, we look on a 30-minute chart as well. Initially, again, as we can see, it was testing or trying to break this key area of resistance, the 1.112, 196 level, could not break it. And obviously on the back of the NFP is now once again under pressure, trading at 1.1103. And like I say, the sterling, again, there's all talk. Can sterling, get down to parity once again? And like I said, I don't know about parity, but certainly I think we can certainly see it hit the 108 region in the medium to long term, especially if we can maintain having a strong greenback. What else? Let's have a look at Bitcoin. Risk off appetite again on Bitcoin. Not really changed any of the range though. It's not suffering as bad to be open, is it really? If you look at it, it's not suffering as bad as say like the sterling or the euro or the yen. I mean, it's still trading around 19,588, but it's still under that key area of 20,355. So obviously it came under pressure today because risk off appetite on the market because of the NFP. S&P 500. Again, surprise, markets are weighed down by this job data. Again, to the fact that the Fed's going to be aggressive, continue to be aggressive. Currently trading at 3,665 points. Look at on a daily, like again, we had two really good days. 2 good days at the beginning of the week, and we're halfway there now, wiping out all those gains it's made on Monday and Tuesday. Halfway there. Currently trading at 3,666 points. So yeah, and one more I want to look at. The dollar yen. This is interesting. Who's going to blink first? Obviously better, a lot better because of this job data. Currently trading at 145.25. However, we're getting close. It's getting close. Again, don't forget to that level that the Bank of Japan intervened last time. So who will blink first? The dollar bulls or the Bank of Japan? Let's have a look and see what happens. It'll be interesting to see how that plays out certainly next week, if it maintains this momentum, obviously. So anyway, what a week we've had this week. This week has been a really interesting week, to say the least. I mean, let's face it, it's been a week of U-turns. I'll tell you that. Been a week of U-turns. First of all, Monday, we got the UK government did a U-turn on their plan to scrap the higher rate of income tax. They changed their minds. They said they're not going to do that. What do we get on the back of that? A bit of a stronger sterling, and sterling had, like I say, like most of the market, had a really good Monday, and Tuesday managed to bounce back. And we had 2 days of gains. In fact, S&P 500 had its 2 best days of gains since 2020. Then we had Tesla. It missed its delivery target, which then sort of spooked the market. Again, there's rumors of, obviously, we've got the earning report coming up soon. How bad are these earnings going to be? And then, of course, we had another U-turn. Musk, keeping with Tesla, Musk decided to have a change of heart, change his mind, and suddenly decide, do you know what? I will carry on and buy Twitter after all. It's nothing to do with the court case coming up. I will buy Twitter. I've changed my mind. So we had a U-turn on that. So a lot of drama on that. Drama, which I don't think is going to go away, by the way. That story's not over yet. RBA surprised the market. They were dovish in their rate hike. They raised rates only by 25 basic points, not 50, which then gave the market the impression that maybe the Fed will do something similar. which they won't. So then we had a little bit of hope, which was soon then dashed. Then what did we have? OPEC. Oh, yes, OPEC. They did us a real favor, didn't they? They've decided to cut oil production, oil output by 2 million barrels per day, which in fact, when it hits the market, it's going to work out about 860 barrels less. Okay. So that has obviously spooked the market, upset the United States quite a fair bit because it's a big slap in the face, especially for President Joe Biden. And at the same time, the oil market has skyrocketed again, well, started to surge higher because obviously supply issues. Then what else we have? The NFP today. NFP today as well, which came out better expected and, still showing that the US labor market is still pretty solid. What a week. Pretty exhausting. But guess what? We've got another week ahead of us. Yes, indeed. UK claimant count next week. UK unemployment next week. UK GDP month on month. FOMC minutes. That's going to be really interesting. German CPI, and the big one for me, US CPI. And I definitely will be doing a watch along for that. And of course, we end the week with US retail sales. But it's all going to be about US CPI. That is the big one. And I will be doing a watch along, so please join me for that. The market as it currently stands, FTSE in the red, negative 0.21%. DAX in the red, also negative 1.50%. Eurostock 50 currently trading negative 1.40%. So yeah, what a week it's been. I'm exhausted, but I'm excited at the same time. I really do. And I hope you can join me for an even more exciting week next week. Obviously, that US CPI. That US CPI potentially could be absolutely massive. Because don't forget the last CPI reading, the market crashed as it came out higher than anticipated. If we get a similar sort of number again, what we could possibly expect for the market. So please come and join me for that. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like, or share me your opinion. Are you excited about the US CPI? I mean, what do you think about the NFP? What do you think about the NFP? Do you think, was it, did it surprise you? Did you have an idea of what number it would be? Not a problem. Don't forget, if you ever think of a question later, you can't think of one now, you think of one later, you can put it in the comment section, either on YouTube or Facebook. I will see them and I will reply to it next time I go live on air, which of course would be Monday, which would be at 8:30 a.m. UTC, and again on Monday at 2 p.m. UTC to cover the US session. So please come and join me for that. Also on Monday, I would also announce the topic of my next hashtag Ask James episode. We did one yesterday. We did introduction to chart patterns and pivot points. So Monday, I'll let you know the new topic of the next episode and when's that going to be. Okie doke. So anyway, so if there is no questions, not a problem. Don't forget, like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video and found it interesting, useful, and you put up with me, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.